Hello, friends. Over the last couple of years, I have talked about Micron several times, and oftentimes in a positive way. And there's a reason for it. Micron is raising its 2026 capex above $25 billion and expects fiscal 2027 capex to set up meaningfully for HBM and DRAM investments. Micron itself has forecasted that HBM market is growing from about $35 billion in 2025 to around $100 billion by 2028, roughly at 40% CAGR. So there's no reason for me to be bearish on Micron at this point. But stock has really pulled forward so quickly that I'm forced to talk about some of the risk associated with this company. If this would have grown slowly, organically, without all this euphoria with semiconductors and AI trade overall, I would be quite comfortable. But because the prices have risen so fast, I thought I should talk about some of the risk that is building up in the market right now. And hopefully, you are paying attention to this, and if you're not, then you could be in for big surprise. And then maybe some of you guys are looking for a better opportunity to get in. Now, before I begin, let me remind you guys, I'm still bullish on Micron for many reasons. Number one, data centers. We are seeing a big expansion of data centers in the United States, and these data centers are not built yet. They're going to be built in 27, 28, 29. Take a look at so many Bitcoin companies that has converted to data centers. They don't even have as many deals just yet. And then this is just United States. Then you take a look at the adoption of data centers and implementation of AI worldwide. That tells me that demand is there for many years to come. Number two, adoption of HBM. That is growing almost month by month. And then on top of that, there is this SSD demand, which is just phenomenal right now. Because see, the more data centers you have, more data you're generating, and more data that you're generating needs more storage. So a lot of SSD demand. And then we haven't really even talked about our smartphones or our local PCs just yet. How long before your smartphones and your local PCs also become AI, right? That means you start to do AI functions right on your phone. You start to do a lot of AI functions right on your computer. How long before that actually happens? And when that happens, your typical memory in a computer might be 500 GB. So things will change. The same amount of hard drive that you have currently in PC, that's how much memory you might have in your PC a couple years from now. And then take a look at all kind of agentic AI, take a look at what's happening in robotics, take a look at in physical AI. So demand is just enormous. So once again, just because I'm giving you a bearish case on Micron today doesn't mean that I'm bearish. So keep that in mind. But we would be a bad investor if we stop paying attention to risk that is building up in the market. So that's why it's important that we talk about it today, especially right now when markets are all-time high, in spite of a lot of macroeconomics data telling us that there's a lot of risk. So once again, my name is Deepak. If you don't know me, I run a tax firm called Tax Code Advisors. So if you want to learn more about me, go to taxcodeadvisors.com or come see me in person. So this Saturday, I will be in Round Rock, Austin. I have a nice meetup there from 9 a.m. to around 4 p.m. And whole day long, we are going to talk about taxes. We'll talk about, 2025 market outlook. How do I strategically position myself for the year? What's happening in the real estate market? I have a special guest coming in who is an expert in acquisition. So I want him to talk about how can you acquire businesses, because I think a lot of people are probably looking for some other way to diversify outside of stock market because markets are so hot right now. So we'll talk a little bit about that. But anyhow, if you want to learn more about that, then go to taxcodeadvisors.com and sign up for that meetup. And I plan on doing multiple meetups in other states as well. If you want to set up one in your state, then reach out to me. Let me know, hey, Deepak, I can arrange a nice meetup. I can get a group together and I'll be happy to come out there, spend a day with you guys and talk more about everything related to finance. But today, I want to talk to you about Micron. Now, before I begin, let me remind you, I'm not an investment advisor, so I can't tell you whether you should sell Micron or you should buy Micron, right? I'm here to discuss what are some of the risks that are building up related to Micron in general and why we should be very careful moving forward into this trade. So if you like that, if you want to hear that message, then stay with me. I know a lot of people get really excited about all the positive videos and why stock going to hit to new highs and all that stuff. But oftentimes people ignore all the negative stuff. So hopefully if you're a smart investor, you are going to pay attention today. So let's start out with the last ER. I'm looking forward to the next ER, but that's not, that we have another 1 month to get there. I was hoping that Micron will hit maybe around 700, 750 by June, but it's already almost touching 800 and we're still 1 month away from June. Now, typically stocks start to become euphoric roughly about 30 days before the ER. So, we're talking about maybe towards the end of May, people are going to really start jumping into this trade. And because Micron is already touching 800, that tells me that most likely if this enthusiasm continues, Micron might even hit $1,000 before the ER. And personally speaking, I'm worried about that. Now, you might be saying, why? Well, because it's just easier to see your stocks moving up in one direction slowly and gradually growing. But when stock goes up euphorically and then they drop, that is very painful. And that is what I want to avoid. Let's roll back and take a look at their last quarter. They reported almost $24 billion in revenue, up almost 200% year over year. Earning per share was $12.20. Wall Street was only expecting, I think, $8.70. So this was amazing. And then on top of that, the gross margin expanded towards 75%. This was good enough to get the stock running. But then came the guidance. For Q3 2026, Micron projected revenue of $33 billion. Now, think about it. It was $23 billion. And they say, no, too low. We're going to go to $33 billion. Gross margins going to go to 81%. And earning per share going to be roughly around $20. Now, to understand how surreal this is, Micron Q3 revenue guidance alone is larger than the company's annual revenue during most years in its corporate history prior to 2025. Naturally, investors see these numbers and think, this company is printing money. Isn't that what we talked about Meta? But right now, Meta is struggling. But that reaction may miss the most important part of the story. Because when you dissect how Micron produced these results, a far more complicated picture starts to emerge. The core issue here, what is the primary source of this income? See, the market is celebrating a revenue growth. What investors should be studying is where that growth came from. And the answer is uncomfortable. Micron's explosive growth is being driven overwhelmingly by price increases, not by massive surge in sales of new memory. That distinction matters enormously in memory semiconductors because pricing power in this industry has been historically very cyclical in nature, temporary, and there's always extreme volatile. But pundits are telling us that this time it's different. And not just the pundit, Micron is certainly telling us that as well. In Q2 of 2026, DRAM revenue surged 74% sequentially to roughly 18.76 billion. That sounds like demand went vertical, but actual DRAM bit shipments only increased in mid-single digits. The real driver was pricing. Average selling prices jumped in the mid 60% range. In other words, Micron did not suddenly ship dramatically more memory chips. It simply sold memory chips at dramatically higher prices. A roughly 65% increase in pricing combined with around 5% volume growth almost perfectly explains the revenue jump. That is very different narrative than unstoppable demand growth. Now, I'm not saying demand is not there, just to be clear. Demand might be there, Micron and other memory companies simply cannot meet that demand. So maybe that is the reason they're not able to do this. But the problem is this: what happens when that demand is met? Will the prices come down? And if the prices come down, will the earnings come down? This is the risk that is building up in the memory. Now let's talk about NAND. NAND told the exact same story. Same pattern appeared in NAND. Revenue climbed 82% sequentially to about $5 billion. But the shipment growth again stayed in low single digits. Pricing, meanwhile, exploded in the high 70% range. So once again, revenue nearly doubled while actual physical output barely moved. This is not a production miracle. This is scarcity pricing. In matter of fact, I'm already starting to get questions around what other areas might be the next bottleneck that might increase prices. And I think one of those areas to me is copper and silver. Anyhow, we'll talk more about that at the next meetup. Once again, that is next Saturday. So if you haven't registered for it and you live in Austin, Round Rock area, then I'll strongly urge you to do that. Like I said, we'll have breakfast there, we'll have lunch there, and we'll have the entire day to talk about it. In matter of fact, I think I have a booking for hall till around 4 o'clock. After that, if you guys still want to talk about it, I can hang out in the lobby and we can discuss about anything that you want to talk about. So please, if you're coming, do register. Go to taxcodeadvisors.com and register. Now, what you might argue with me is that, Deepak, you know, this could be just one-time event. Maybe going forward, things will be different. Well, if you take a look at the prior quarters, same thing. In Q1 2026, DRAM revenue rose roughly 20%, shipment only increased slightly, pricing was up almost 20%. NAND revenue increased around 22%. Volume growth is just not there. Pricing is what's driving the growth. And that is what's scaring me right now. Now, pay attention to software industry. See what's going on with software industry. People were piling into software companies because all they have to do is add more seats. They just have to sell more licenses. And when they do that, they generate massive cash. Why? Because there's no extra cost, in development or do anything else. They're just able to generate more revenue by simply selling more seats. This was wonderful. Micron is starting to look like that software kind of environment. The margin expansion is where things start to feel almost disconnected from reality. Micron Mobile and Client Business Unit went from approximately 15% gross margins a year ago to nearly 79% today. That is 64-point margin swing in 1 year. For context, the 79% gross margins are the kind of numbers investors think of what? SaaS platforms, software, not commodity like memory manufacturing. The automotive and embedded segment saw margins rise from roughly 21% to 68%. The data center segment climbed from 47% to 74%. These are extraordinary numbers, but investors need to ask a difficult questions. Are these structurally durable margins? Are they the temporary results of brutally tight supply environment? The evidence right now suggests that it is supply issue. But once again, the reason that is because the clarity around demand for memory is just simply not there. We have to wait and watch. It was kind of like Nvidia in the early days. So if you go back maybe around COVID time, the people who work in Nvidia or people who understood Nvidia were very optimistic about Nvidia. But people like me or people who were not from the industry or people could not understand what was coming, we perhaps made the same comments like I'm making today for Micron. That's why I begin this video by stating that even though I'm going to talk very bearishly about Micron today, but I'm still bullish on Micron. The most important detail is that in several business units, Micron explicitly acknowledged that revenue growth came almost entirely from higher pricing while shipment volumes actually declined. That changes the interpretation of the entire quarter altogether. For example, The mobile and client business unit experienced 81% sequential revenue increase, but management noted that pricing gains were partially offset by lower bit shipments. In other words, revenue and margins surged despite fewer units moving through the business. The same dynamic appeared in automotive and embedded. Again, higher pricing, lower shipment. That is classic late cycle supply shortage behavior. There is a growing temptation to compare Micron margin to Nvidia. In matter of fact, this was the exact question that was asked during my last discussion call. And Anindya Bhai, who is an expert in AI and he understands semiconductor very well, he clearly pointed out that it's not that easy to compare Micron with Nvidia. And I'll give you some thoughts around that just in a second. Uh, but I think it is comparable to Micron in terms of stock price, meaning we as an investor do not truly understand what the demand looks like. Now, why do I say that? Because if you're bullish on Micron, if you think Micron is going to hit $2,000, $3,000 in next year or two, then you're going to ignore all the noise and you're just going to focus on that one thought that you have uh, built up in your mind or you have arrived at that conclusion. But the reality is you don't really know. The reality is you don't have that data. Because if you do, then I would like to see it. And in matter of fact, the whole world would like to see it. In matter of fact, Micron would have shared that with the shareholders a while ago. All they're saying is for the time being, this is what the demand looks like. But the reality is they don't even know. Now you can ask me this question. Well, how do you know they don't really know? Well, I know this because they're building the factories now. If they knew the demand was there, they would have built the factories 3 years ago, 4 years ago. Why are they getting into this now? But reality is nobody really knows. So we have to be careful. Going back to NVIDIA. See, NVIDIA has a pricing power that is protected by structural advantage. That's why I'm very bullish on NVIDIA right now. In matter of fact, I've been building my position higher in NVIDIA for last couple of weeks now. So, what are some of the advantages? Well, they have a CUDA software that is locked in. They have a massive developer ecosystem. They have AI training dominance. They make switching from NVIDIA to something else very hard. You have to replace the entire racks. Sometimes you have to rebuild the entire data center altogether. So they have this proprietary infrastructure that you can't really use anywhere else. So customers cannot easily leave NVIDIA without major operational pain. And on top of that, they keep releasing new chips every couple of years. So if I have the older chips and I want to participate in what's new and upcoming, then I really need to replace those chips. So they continue to have that in GPU's market. Now you can say, well, Micron can do the same. They can, but not exactly. You know, the memory chip industry doesn't really change as fast. But when we take a look at GPUs and CPUs, that industry is changing way faster than what memory can. So that's why I said Micron does not operate the similar kind of business or similar kind of ecosystem as NVIDIA or, for example, AMD might have. So memory remains a fundamentally different story. Memory competes with other companies like Samsung and Hynix. And historically, memory products have behaved much closer to commodities. There is really no equivalent of CUDA in DRAM. That matters because it limits the durability of the pricing power. Like how long can they sustain these margins? To be fair, Micron is not simply selling generic memory anymore. So that story has changed. Its high bandwidth memory products are genuinely competitive. The company's HBM3 reportedly delivers significantly lower power consumption that rivals. That is important. I mean, in 2027, 2028, there will be so much power consumption by data centers that if something can save even 1% of that power, that can be a company on its own. So saving power is important. HBM4, that product is impressive. Those are real advantages. But investor should avoid assuming Micron owns the market. Samsung recently passed NVIDIA's HBM qualification process and resumed aggressive volume shipments. SK Hynix remains deeply entrenched in advanced HBM production as well. So it's not really a monopoly story. It's an arms race. There are other people in the market as well. The truth is, today's stock performance and today's pricing power exist because supply is broken. So, do you guys remember COVID time? And you saw what happened to Zoom? It just went up because we assume everybody going to use Zoom forever. And after COVID, the stock crashed. Question is, something like that may happen with Micron. Micron management admitted the company can currently satisfy only a portion of customer demand. That explains why pricing has become so extreme. The AI infrastructure boom created a severe memory shortage. Right now, hyperscalers are effectively competing for constrained supply. That environment gives suppliers enormous leverage. But history matters here. Memory shortages do not last forever. Eventually, supply will catch up. And when it does, pricing behavior can reverse violently. The entire industry, the entire AI industry, is spending aggressively. Micron is dramatically increasing capex. The company plans to spend over $25 billion dollars this year alone. Construction spending is expected to accelerate in 2027 as well. There are new facilities being built in Idaho, New York, Japan, Singapore, Taiwan. And that's just Micron. Samsung and Hynix are also spending aggressively to expand HBM and DRAM production capacity. This creates a potential dangerous setup because memory cycles historically turn when everyone expands supply simultaneously. Think about, real estate, for example. Let's say if you go into a market and all bunch of builders start to build homes in that market all at once, well, eventually you are going to have too much supply and the home prices will come down. You might say, well, I wish that is really happening in the country. Well, they are, but I know in some markets you are struggling. But in a lot of other markets, for example, Austin, prices has come down a lot because there's just too much supply. Anyhow, going back to Micron, right now my biggest risk with Micron is timing. Most of these new fabs will not contribute meaningful output until 2027 or 2028. Now, several analysts believe that current supercycle could peak around 27 or 28. So, if supply ramps aggressively, just as AI infrastructure spending normalizes, the industry could move from shortage to oversupply really fast. And in memory, oversupply tends to destroy pricing power. HBM is quietly distorting the entire memory market. One of the most underappreciated dynamics today involves clean room allocation. HBM production requires dramatically more clean room space than traditional DRAM. That means HBM manufacturing is unintentionally restricting standard DRAM supply. As a result, even non HBM memory pricing has become artificially elevated. Ironically, one of the Micron biggest profit tailwind may not be HBM itself. It may be the shortage HBM is creating elsewhere in the market. But that dynamic can change. If HBM demands cools even slightly, capacity may shift back towards standard DRAM production. And because of the clean room intensity involved, even small reallocation could create a large increase in supply. That could pressure pricing across the entire memory ecosystem simultaneously. Micron forward PE currently appears very low. At first glance, the stock looks inexpensive. In matter of fact, that is the most common argument you're going to hear from the pundits. But in a cyclical industry, extremely low valuation multiples often appears near earnings peak. That is what makes memory investing so dangerous. The market may not be undervaluing Micron. It may believe today's earnings are simply not possible in future. This is why low PE ratio in commodity like industries can become classic value trap. Other thing that you also want to pay attention to is a tax matter. Micron's new fabs are enormously expensive, long duration assets. When those facilities become operational, depreciation expense will rise materially. If that occurs during a normalization phase of pricing and demand, profitability could compress very quickly. This pattern has occurred repeatedly previously. Massive capex boom, new supply enters markets, pricing weakens, margins compresses, returns on capital diminishes. The industry has seen this movie multiple times before. So the question you probably be asking right now, well, Deepak, this is all great. So is Micron a great investment or is it a trap? Well, the honest answer is it depends entirely on how long current pricing conditions persist and what does the demand for memory looks like going forward. For example, we have no idea what kind of memory robots might use in future, what kind of memory need our cars will have in future, what kind of memory need our phone or our personal computers will have in future. We don't even have answers to any of these questions. What we do know is right now data centers need a lot of memory. So if AI infrastructure demands continues outpacing supply for years, Micron could continue generating extraordinary results. But if supply growth catches demand sooner than expected, the earnings power investors are expecting today could prove temporary. That is a real debate. But you have seen in last couple of months, PE ratio of Micron is now going up. So perhaps market is arriving at a conclusion that this demand is not temporary. So this debate around supply and demand is a real debate, not whether Micron quarter was impressive or the June quarter is going to be impressive, which I think it will be. Just like the last quarter was, I think they're going to give up phenomenal numbers. And Sanjay will talk about how much demand there is for memory. No doubt about that in my mind. The real question is whether these margins represent a new structural era for memory or memory is still a cyclical business. Now, if you read the last presentation, you can go on the investor relations page of Micron and read it. According to company, it is a structural shift. But I cannot verify that with independently. I'm not seeing those in numbers just yet. And I think part of that reason could be is they simply don't have more fabs. They're not able to produce the supply. So that's why those numbers are not showing up. But even a bigger question is what happens when supply and demand kind of arrives at a intersection where things start to balance? What happens afterwards? So for me, Micron is certainly a great investment for now. As you guys know, I got into Micron a couple of years ago and I added all the way till few months ago when stock was still less than $400. So I have heavily invested in Micron, no question about that. But I cannot be blind. I have to pay attention to these things. Now, I was going to release this video more towards the end of June after the Micron releases the earning. I was expecting the stock would be somewhere around $700 by that time, but stock is already touching 800. That's why I thought it makes sense for me to release this video a little bit early. For the time being, I'm more excited about NVIDIA. So I'm waiting for the next ER, see how they do, and then we'll go from there. But here you go. Hopefully this video was helpful. Please leave a comment. And if you are in Austin, Round Rock area, then I'm looking forward to seeing you on Saturday. So just go to taxcodeadvisors.com and register for the upcoming meetup. And then if you're not from the area, you live somewhere else, reach out to me and I'll be happy to organize an event in your area as well. Thank you so much for spending your few minutes with me, and I'll talk to you next time.